Come in. So good afternoon, everybody. Welcome to the ACFE Ireland Insurance Fraud webinar. Thank you for taking the time to join us. For those of you who are not ACFE members, a special welcome. The Association of Certified Fraud Examiners is a global organization with over 85,000 members and 197 chapters, all working towards one common goal: to intentionally reduce business fraud through awareness and training. The Irish chapter was established in 2016 with 12 founding members, and we have grown exponentially over the years. Our focus is to offer members training opportunities to ensure that they are well informed and that they have the skills and the strategies and the experience to effectively fight fraud and corruption in their organizations. In order to achieve this, we partner with industry-leading expert speakers, such as our guests today. So I'd like to say a warm welcome to Glen Marr and to Elaine Ward. Glen is the Senior Director of Insurance Analytics and Financial Crimes at Luxoft. His specialisms include designing, implementing, and leading risk-based strategies to mitigate fraud and broader financial crime, and the management of insurance claims. Glen has worked closely with data scientists and senior analytical people that have seen firsthand the value of AI and machine learning. Glen is a seasoned speaker and has been featured on national TV and radio. So welcome to you, Glen.
Thank you very much.
Elaine is the Investigations Manager at Protocol Security and Investigation Services. Elaine has over 20 years experience carrying out insurance and corporate fraud investigations in Ireland, with particular interest in employee fraud investigations. Elaine's corporate clients are positioned across all sectors, with companies ranging in size from micro enterprises to large corporations. She holds an HND in business, a diploma in corporate fraud investigation, and an advanced diploma in corporate, white collar, and regulatory crime from King's Inn. Welcome, Elaine. Thank you very much for jumping in and assisting us today.
No problem at all.
So today we're going to be chatting about insurance fraud, a little bit of housekeeping. As the discussion moves along, there are 3 polls that will appear on your screen. Please take a few seconds to respond to these questions. We'll be monitoring the chat room, and you can find your Q&A box at the bottom center of your screen. All questions will be addressed during a Q&A session at the end. And please remember to remain on mute to mitigate any background interference. So without any further delay, I'll hand over to Elaine and Glen.
That's great. Thank you, Bridget.
You're welcome.
Okay, so as Bridget mentioned there, I'm on the investigation end of things, the surveillance end of things for insurance fraud. So I'm just going to have a chat here with Glen, who in his work in analytics, he is at the forefront and at the start before these insurance claims get to my stage. So thanks a million, Glen. Good to talk to you. So I just want to start, Glen, by asking you, where and how are insurers suffering with fraud?
Yeah, thank you. And firstly, thanks to ACFE for inviting me along today. It's great. No apologies for the Easter egg behind me. It's mine. This is my home office. So yeah, insurers suffer pretty broadly with fraud, and I'm sure we've got some SMEs on the call from insurers, and it's slightly different from other financial services, but there are some similarities. The ones where it starts, and in fact, this is where insurers are probably least developed around the world, is before people actually get a policy, so that, you know, the fraud will start when people are applying for cover. So there's a whole raft of ways of defrauding an insurer just to obtain cover. And if you look at some markets, and if you look at, as a good example is the UK, where the bulk of policies are sold online with no humans involved. It's an automated process, so it's fantastic for fraudsters. And that's where insurers are having to work really, really hard to deal with people taking cover out and being dishonest in a whole range of ways, whether it's their identity, whether it's their history of claims, whether it's their ownership of properties and vehicles, whether they're actually being honest about their occupation, whether they've been honest about where they are in the world. So the online insurance world enables people to take out cover wherever you are in the world. There's a lot of scams that run from different locations, and there's technology that's the forefront and analytics about how you identify these behaviors when policies are taken out. That's where insurers have an Achilles heel, because historically insurers were working on the basis that they were kind of almost like over trusting people when they were taking the cover out, and then they were finding a problem at point of claim. Obviously at point of claim, there's a whole range of types of fraud there, ranging from very simple accidental damage claims in the house, damages to small items, expensive items, and lost items. And some of them are actually quite hard to spot because they are in volume and they come under the radar. And insurers tend to have conveyor belts of claims that some of the smaller ones get pushed through quite quickly. And it's a customer-centric world we're in, so you have to pay claims quickly. And then you get right up to the complex organized fraud where, the common one is staged motor vehicle accidents, which is pretty much rife across insurers. And that's not just insurers in this part of the world, it's insurers globally, and it's particularly bad in America. But there's organized frauds in different ways. There's money laundering. I know insurers and money laundering, you don't often hear that in the same context. But, I've certainly identified people taking out cover with stolen or compromised card details, taking out the cover, in the 14-day period, making an adjustment, like adding a driver on. And then when they add the driver on, they pay for that change with a different card. Then they cancel the policy a few days later in the cooling off period. And the money is going to the clean account, usually run by a mule, and the money goes through the system, money laundering. So that's actually going on, and it's not spotted very often. So there's, you have the simplistic opportunist fraud, and then you have the more complex at the end, and you have everything in between that. And then you have the piece that I think, if you look at an insurer, whenever I talk to an insurer, you talk about claims by their policyholders, claims by third-party claimants. You also have people talking about fraud by their own claims handlers. And then you have the one where, this is a tough one to deal with. It's fraud by the suppliers to insurers, where the insurer is providing outsourcing a service, whether it's property claims, vehicle claims, whatever. And there's fraud in that life cycle, in terms of the supply chain. And there are a number of, opportunities for fraud to take place there. And almost without fail, that's an area where you talk to an insurer and there's room to do more. And again, some of the answers sit in the data and some of the answers sit in how you contract and manage the suppliers. So it's quite a broad spectrum of where fraud goes in, and all of it collectively adds up to quite a bit of money.
Yeah, and in the UK, what is your average? What kind of claims amount are you looking at on a yearly basis?
Well, the claim spend in the UK is in the billions. I think over here, the average fraud for a fairly simple personal injury motor vehicle claim is about £12,000. I think in Ireland, you have one of the highest, if not the highest, payments to personal injury claimants. In the UK, we have the misfortune to have more personal injury claims per vehicle than anywhere else in Europe. And they think we have the softest necks in Europe for when it comes to whiplash. Yeah. But new legislation has been passed that comes in, it's due to come in end of next month, which really is taking out a lot of the money out of the system, taking lawyers out of the process, which means that people make claims for whiplash and everything. They're not going to get a lot of money, and they're going to be facing directly with insurers without being able to work behind a lawyer. So it's the largest ever change, which the industry has been lobbying for years, which is intended to strip a large amount of cost and incentive out of the process of making, fraudulent motor vehicle claims.
Yeah, we've had recent reform in our own insurance claims industry as well. I think we haven't even had time to enact it yet, but it has come in now. So whilst we do have the highest claims, I think in Europe, I think it's over 4.4 times the size of the UK claims, they are reducing the payouts somewhat, which we imagine is going to bring less cases to the high court level. And they'll be dealt with the personal injuries assessment board before they get to that stage. So obviously COVID-19 and all the issues that came with it in the past year, Have the drivers for committing this insurance fraud, have they changed?
They have. And if you look at the two core historical drivers, it's need and greed.
Yes.
And over the years, I started off investigating fraud hands-on in New South Wales and Australia. So all the way through, I've dealt with fraudsters of all types. I've met thousands of them face to face. And the vast majority, it's greed.
Yeah.
You then have a smaller proportion with need. But over the last year, you have something that's come in, probably that hasn't been there in such prevalence. It's called desperation, where people, we're losing large amounts of jobs all around the world. Certainly, if you look at the UK, some very well-known businesses have collapsed. We've got household name businesses collapsing. They continue to collapse. The retail and hospitality market has been hit really hard. So if you look at it, the desperation has kicked in. Now, it's the first time in my lifetime I've actually seen that kick in like this, because obviously we're dealing with something that is highly unusual. The need, greed, and now that desperation. So for an insurer, that does have an impact in terms of who you're dealing with. And also, the need to manage claims carefully, because amongst the dishonest, most are genuine, and there's an awful lot of, stressed people out there who want fast track service.
Yeah, and you're also dealing with the Brexit issues as well. And I suppose the worry that people have, around their jobs and things like that. And I know in the crash here around 2008, the claims just jumped through the roof because people were really worried about paying their bills and paying their mortgage. So it was the highest rate of claims that we've ever seen here, So with a combination of Brexit and COVID, I imagine that the claims are just going to skyrocket.
Yeah, you've got a perfect storm there.
Yeah,
and
it is.
Storms, all you need now is a severe weather incident to add to the pain. But you're right. I mean, we've whether Brexit is right or wrong, I won't go into that. But it's created an unsettled environment everywhere. I've countless numbers of people and friends I know have lost their jobs or are about to lose roles, and they've all got mortgages, they've all got children. So yeah, you've got that horrible perfect storm where people need money.
Yeah.
And insurance companies get a lot of flack for how they treat people. It isn't sort of a relationship that it's the same as some of the other businesses out there. It's a business, that insurers, you use them because you have to by law, or you have to use them through need. And that's sometimes a place where they turn when an opportunity presents itself. So even people that would never put a foot wrong, and I've met many of them, do something wrong because they're in a corner. And
I think it's perception as well. I was reading recently, it was a Red Sea poll that was done. I think Allianz, I think there's a few members from Allianz today, but they conducted this Red Sea poll, and they were talking about people's perceptions of insurance fraud. And they came up with some figures which I thought were fairly staggering. 8% of the people interviewed said that they found exaggerating an injury to be a fraudulent act. So only 8% thought that was actually fraud. 1% felt that adding on extra items, say in a house claim, that weren't damaged or stolen, 1% thought that was fraud. So, it's a large amount of people that don't consider those things to be fraudulent. So when they're faced with an economic crisis, and this, an opportunity might arise maybe to put in a claim, they're not seeing that as fraud. They're just, it's exaggeration. They don't see exaggeration as fraud. So, it's not a crime to them as such.
They know it's wrong, and they
morally
know it's wrong. And all the ones I've met over the years, they sit there and give you a whole lot of reasons why they've done it, none of which makes sense, by the way. But yeah, they know it's wrong. There's an opportunity there. They probably don't know anybody that's been caught. That as a deterrent, one of the strongest deterrents is you get caught, and when you get caught, there's ramifications that you don't like. And now, if you don't know somebody in your local pub, I know no one's in the local pubs at the moment, but if you don't know somebody in your network that's actually been caught for fraud, you can advertise it any way you like. But the biggest deterrent is someone and something
Absolutely.
happened that was unpleasant, that makes you think. So I live in a small village in West Sussex. If someone in the village was convicted of insurance fraud, it would be all over the local village community Facebook site, and it would send shockwaves. But until the industry gets to the point whereby, and there are reasons why we're not there, prosecution levels are such that you know about it if you're in County Meath or wherever you're going to be, that's quite fundamental.
Well, I think I certainly here anyway, I think one of the big problems has been that we just don't prosecute insurance fraud. There has been very, very few cases. There was a case up recently towards the start of 2020. And actually, it was going to be a great case, and it came to court, but because the book of evidence wasn't ready, it was dismissed. And cases like that, the few that do come on, they aren't prosecuted the way people would like to see them prosecuted, because the fraud is probably found before the case gets to court. It's usually found in the settlement. So, you're happy to settle and just move on, and they're not actually prosecuted, so I think that's kind of been one of the problems. We don't have that embarrassment factor here. There's been a few people named in the papers, but there isn't that embarrassment factor to deter. So it's seen as something that, you can get away with, because you mightn't know somebody who's been prosecuted, but a lot of people know somebody who got an extra 10 or 15,000. The girl down the road got her extension done because, she had a whiplash claim, so people, they know them, so they don't see it as a fraud, So the fraud is costing these insurance companies, in Ireland anyway, it's 200 million a year. You're looking at 50 euros on average per person for their premium added on because of the cost of this fraud. So, worldwide, 80 billion we're looking at in the USA. And although we've brought in some reforms and you've brought in some reforms, with the use of analytics, your involvement here, do you see that could be reduced in any great numbers or great percentage, the amount, what kind of reduction could, if analytics were used to their full potential, and AI, could there be a massive reduction in the amount that countries are paying out for insurance fraud?
Yeah, probably the first point to make it's important is I've actually not seen any country measuring fraud robustly. So when I hear figures of 80 billion, there's 2 billion in the UK, you've just mentioned a couple of 100 million there, there's a billion in Australia, whatever it is, they're all based on estimates.
Yes.
So when you base yourself on estimates, if you reduce your fraud from 1 billion to 1.5 billion as an example, people get excited. But if I compare the UK, where they measure detected fraud reported by a select number of insurers, and not all of them report them, and not all are not all are comparing apples to apples. So the first thing I'd say is the figures are not a strong basis to work on. And there's a lot of work to do here, and there are opportunities to do this in a way that isn't being done now. Going back to that question of can analytics make a difference? What happens is with analytics, the first thing you should see, and it doesn't happen overnight, is detection goes up. So your detection will rise, you'll detect more. If you detect them at the right point in the process, you won't pay the money, or you'll pay less money than you would have done ordinarily. So ordinary with analytics, and sometimes it's a big change for an insurer, sometimes an incremental change, then you get more detection. But as time goes on, as there's more detection going in, and as more policyholders and third parties realize that these insurers are actually more likely to catch you, then it makes a difference. But aligned to analytics, it needs more than that. It needs automation. So, and I know we're going to talk about where insurers are, but unless you automate some of this activity in terms of you can spot something wrong, you're always going to struggle. You always need a human involved when it comes to making the decision whether to investigate, file to claim, whatever. You need some automation to say there's something wrong here. And if you rely wholly on people, then you're flawed. But I'll go back to that number of the stats. Every time the stats are told, every time someone says to me 10% of claims are fraudulent, the first thing I say to them is, can we move on from that? Because that's not based on any evidence or scientific evidence. That's the back of a fag packet, as we call it here. which is in the back of a fag packet. I've been in the industry for 30 years, and that's been comments been made ever since I started, which was in Australia. So I had to scout all of that, because when you look at an insurer's detection rate, the average detection rate of confirmed fraud across an insurer is less than 1% of all new claims.
Wow.
So that's what we see, less than 1%. You see some detection rate a little bit higher, but if we look across the global remit that I work in, it's less than 1% of new claims are confirmed fraud.
Wow.
So if you look at what people view as the levels of fraud, and then you say, well, you talk to an insurer and say, how much fraud's out there? They go, well, 10% of my claims are fraudulent. You go, you're detecting less than 1%.
Yeah.
And you kind of say, well, where are you? What's stopping you getting further? So, yeah, I think you need to work on the stats. Just some people may not want to go down the route of the stats, but it needs it badly.
Yeah, yeah. And your use of analytics, just, you'd mentioned earlier on that, you know, the kinds of claims that are happening at the moment and the kinds of insurance fraud. And you mentioned that, you know, people not sending in the right information, providing the wrong information right at the get-go. Analytics, its use, it's all dependent on the information that's put into the system.
Correct.
That's so.
Correct.
If that's not detected at the beginning, if you're being provided with false information, and I don't know if you know, claims workers working at home now, if that has a bearing on the kind of, you know, the quality of the information that's being put through the system. How do you work around that, where the information that you have to begin with, it's just, you know, it's not of a great quality, you know, or there may be false information. Does that not throw the system off?
Yeah, and yeah, it's as good as what you put in. So
yeah,
if to be candid, if rubbish goes in, rubbish is going to come out.
Yeah.
So analytics is, you know, you need to be pretty rich on your data. We find insurers at a range of, I've seen one that was at the extreme end of, you know, we declined to use the analytics and said, you don't have enough data. There's just no point in even trying, right up through to they have quite a lot. So generally speaking, most insurers have sufficient to run analytics. And it's about, you know, how you run the analytics, the techniques you apply. So you'll see some products in the market that say, out of the box, you know, we're going to find a ton of fraud. Well, when you look at AI and machine learning, it doesn't work that way. It's called machine learning for a reason. It needs to learn over a period of time. It's usually measured over a period of a few months where the fine tuning takes place. But it's, you know, the one thing you need is personal data.
Yeah.
You don't have the PII data. It's really, really hard work.
Yeah.
Because you're looking at behaviors of people, behaviors of businesses. That's where the tech is sophisticated, because, you know, I can take a phone call from you and I can probably work out, having been around a long time, if you're trying to string me along a little bit. But, you know, there's one of me and you get a big insurance company, how are you going to do it? So, yeah. And, you know, when we work with insurers, we're pretty honest and say, look, you know, there's some gaps in your data. And part of what they find is we can play back and say, this is what you find with the data you've got now. This is what you'll find if you plug in extra data, you make it richer. And the other one is third-party data sets. So, you know, there's data sets out there you can use to bring in the analytics to enrichen the results. So I'll give you an example, and everywhere is slightly different, but we're all under GDPR. In the UK, you can pull in a range of data, credit data, known fraud data, address verification, ID verification, a whole range of data, you know, media data you can pull in. There's quite a lot of it. And it varies in countries. In America, you've got the extreme of they seem to be able to get anything. To over here, we've got GDPR. But regardless of GDPR, you know, GDPR doesn't stop you managing fraud. It just means you have control over data, which is a positive. So yeah, this is a data game.
Yeah.
But part of the information also sits in the human brain. You know, so you know, you've got to get what's in there into a machine to say, I'm going to spot something, but I'm going to learn by the outcomes, which is quite fundamental. Okay.
And just in talking about the GDPR, your use of analytics with the insurance companies, am I right in saying that it's their standalone, each insurance company runs its own analytics? Or is there a capacity for one big shared, you know, analytical model between the insurance companies? I mean, I think in Ireland we have an insurance link, which, you know, details of claims are put on, and insurance companies can access, but it doesn't have any predictions. It doesn't pick out anything, you know. It's just literally a record of claims, and I'm aware that most of the insurance companies do run their own kind of analytical models, but they're all standalone. There's no big, you know, central hub for all of this. And you know, we put that down, I suppose, if I think about it, it's because of data protection. We're fairly stringent data protection, GDPR here. So is that the reason why this information can't be shared? Would policyholders have to agree to their information being shared like that?
Yeah, firstly, we're getting some questions coming in, so I think we'll pick them off at the end, because there's a really good one coming there around bias, which is great. Another one about challenging claims in Ireland, so we'll pick them at the end. Otherwise, I'm trying to dual task to type and listen and talk. So,
sure.
Yeah, in terms of the analytics, so I'll give you an example of where something is very different. So if you look at the UK, because it's closest to us across the water, they have something called the Insurance Fraud Bureau. I was involved in setting it up in 2006. It's still going in the GDPR world as well. They pull all the claims data from the entire UK insurance sector for vehicle claims, property claims, and injury claims, employers' liability, workers' compensation. They pull it together. It's a few 100 million records. That's updated every night. They have all vehicle details of every single policy, all the named drivers, everything. All the claims outcomes that's there. They have known fraud data, and they have other data. It's all pulled together, and they have police intelligence data, and they run one set of analytical tooling across the top of it, and they're looking for confirmed networks, and they work with insurers to do it. So that's a very strictly controlled environment. When it was being set up, we had to go and see the Information Commissioner, that is the governance of all data in the UK, and they were quite impressed with all the governance in there. It's still there with the GDPR. It's just as strict in the UK, and they have to have audits and controls around it. But what you don't want, this is a personal view, is if you have one analytical model working across all the insurers, I don't think it's going to work if you're going to use it for all analytics, because insurers are different. Their tolerance for fraud risk is different. They do have different risks in customers. And I think insurers need to control their own destiny. So, you know, we work with insurers at Luxoft, and we have some what we call out-of-the-box analytical models, things that are in there. But, you know, we're working with some insurers at the moment, and during the phase of setting up or a proof of concept, we are building new analytical models for them that suit their business. Okay. In other words, we take their data in, we put the out-of-the-box analytics through, and then we say, look, we'll build some models around where we think the fraud is in there, and there we do it. But personally, I think insurers should control their own destiny. Okay. I think the Bureau model in the UK, which was the first of its kind in 2006, and to be honest, still does things that isn't replicated anywhere, was a phenomenal step forward. Okay. It was also used for lobbying the government. And, you know, there's a similar one in the States, but it doesn't do quite the same as that. But the Insurance Fraud Bureau then has had a replicated model in South Africa, in other countries. So it's all about controlling data, strong governance, but also insurers must control their own destiny. You know, if you have one entity finding all the fraud in every insurer, I'm not sure anyone would be comfortable with that. Yeah. Including customers.
No, the Insurance Fraud Bureau, I had read a bit about that coming up to this chat, and it's a fantastic idea. I mean, it's quite simple idea that this one, you know, unit takes all the information, you know, as you say, every evening and just processes it. And I think something like that is just, you know, it's a phenomenal tool. Does that then report back to insurance, you know, does that report back to insurance companies if, say, it pulled insurance information from 3 different insurance companies, came up with the same claimants? Are the insurance companies then notified that we've picked up on these matches here?
So they hold, I don't know, a couple of 100 million records at any one point. So they're focused on organised cross-insurer fraud. So let's just say, you know, Elaine, you're a part of a gang of fraudsters. Their analytics will see it, and they'll send to the insurer through an encrypted process, you are part of an organised fraud network. Here you sit in the organised fraud network. You're either at the start of it or the end of it, all the phone numbers, all the email addresses, all the people. It's all put in a pictorial form. But that bureau also collects known frauds that are reported through a system, which is a extremely stringent way of reporting fraud. And they take it a little bit further in that the insurance industry over here funded a dedicated police team, which I was involved in the origins of, where the City of London Police have a dedicated insurance fraud team which works across England and Wales. It doesn't work in Scotland because the legislation is different. Insurers refer cases to them, so does the Insurance Fraud Bureau, and if it meets their criteria, they'll accept it. And they're out kicking down doors, arresting people. And the prosecution rate, is the highest ever, I think, in the insurance sector. And they publicise it everywhere. It's in newspapers. And, that costs the insurance companies quite a lot of money every year. But you know what? And I know it's been being talk of it in Ireland, and there are some critics of the system, but you know what? It's part of it. It's part of the response to fraud. Yeah. It's part of that collective response.
Yeah, I think at the moment, our insurance fraud, if it is investigated, it is by An Garda Síochána, it's by the GNECB, but they are extremely busy. And I know from listening to a few of the conferences that went on recently, it has to be a very, very high level of insurance fraud before they can, give it any form of resources. So that's why, a dedicated insurance fraud unit, people have been campaigning for this for years. So, you never know, it might happen, maybe a smaller version of your model there, Glenn. Luxoft, your company at the moment, how are you working with the insurers to mitigate the fraud, and in particular the fraud in the last year as well?
Yeah, so Luxoft is a technology company, part of owned by a larger business called DXC, which is a global business. So I work in the analytics section, which focuses on insurance fraud and wider financial crime. So we work with insurers, and we've got insurance engagements just about everywhere, including in Ireland, whereby we work with an insurer, and we're not the silver bullet. We can't fix all fraud issues, but what we do is we say to insurers, look, we have analytics, they're we call multi-layered, and we work with insurers to say, look, we work with your data. If you firstly tell us how you operate, it's a sort of an open conversation, but tell us how your fraud model works, the good, bad, and the ugly. Let us see your data. If we think your data is acceptable, we'll pull it securely into the analytics, and we'll work with you to identify fraud. And, whether that's organized fraud or simple fraud. So that's how we work with them. What we do, the first phase is most insurers want to evaluate it. Insurers very rarely will say, I'm just going to buy something now. So we don't charge for it. We just say, it costs a lot of money. I mean, Luxoft, this costs tens of thousands to do this. We will stand up the system. We will take the data in, have data scientists working with them, large teams. I'm always involved in it. And, and then the insurer can make a decision to say, did it spot more fraud? Is it more efficient? It's an end-to-end solution. So from detection right through to organized networks, right through to case management investigation, it does everything, including identifying, pulling text out of documents and file notes, automatically bringing that back in. So it's a really complex system. It's actually IBM's technology, but Luxoft is the primary global route to market for that technology. So we work hand in hand with IBM, and it's being developed all the time. So we work anywhere. We tend to focus on Europe, the US, and we're pretty heavily into APAC at the moment. So there's a lot of focus on AI and machine learning, and the product is built around AI and machine learning integrated, been built just for insurance fraud. But the main thing is we talk to insurers, learn a little about what they're doing, think about how we could improve it by having an end-to-end solution, so it uplifts the fraud and it makes them more efficient because you've got automation in there, investigative tools, case management. So it brings it under one platform, which you can stand up in the cloud quite rapidly. So, and and people think, oh, is that expensive? And the answer is it's not as expensive as some people might realize.
Yeah.
So, it's all about, the insurer been open to say, let us tell you how we work, let us tell you what we're trying to achieve, let us tell you where we're weakest, let us have that open dialogue, and then we'll say, look, let's have a look at your data and run the analytics. I say we don't charge insurers for that, but we do need them to have an interest in the tech to start with.
Of course.
Otherwise, we'll spend all our life saying, well, we'll invest a lot of money. So yeah, we've and it's not a magic wand. You don't just turn it on and it pulls it out. It needs work.
Yeah.
It needs an insurer that wants it to work and wants to work with us. It's not a case where it's, sits in Luxoft and we do the analytics, do the clever stuff. We have to work as a team. And ordinarily, when we're not in lockdown, we're actually sat in their offices, working with the fraud teams amongst them, showing them what we do. Now we're doing it remotely, but we still can walk through what's going on. So yeah, and the Irish market, I think, is pretty prime for this.
I think so.
The other markets are going down that journey. And I think this would help, the market and individual insurers. But the only way you learn is by putting your toe in the water and saying, well, if we give this data to Luxoft, what happens?
Yeah. And from start to finish, just my own curiosity, when you go into a company, Glenn, and you're in an insurance company and you set them up and their data is okay and you're running with them, how long are you with them? Are you with them for a few months and then you leave them to it, or are you with them all along, analysing their data for them?
It varies. Well, we're never away from them. So
yeah.
If it's a 5-year contract, we're never away from them.
Yeah.
It depends on what the insurer wants. Where the tech's slightly different is you can become self-sufficient very quickly. It's probably an odd thing to say, but we don't have to have people coming back to say, how do you do it? We show them how to do it. The analytics they're all tunable by their own people. It's quite an intuitive system. So at the very beginning, when we're building the models and testing them, we're living and breathing it.
Yeah.
It might go on further. If there's a sort of a skills and knowledge gap inside the insurer, we want to transfer knowledge. So our goal is to help the insurer be more self-sufficient rather than reliant on us. And some insurers say, no, I actually want you to do all the analytical. Every time we have a new analytical model we want to produce, we want you to do it. But in reality, with this technology, insurers can do it. Not all insurers have data scientists, but the tech actually can be used by, if you like, pretty competent analysts. We can show them how to use it. But effectively, we don't just sell it and walk away. There also the technologies continue updated. There's lots of interaction going through it. And, there has to be interaction because, you want to make sure that the technology is matching client needs, what we need to develop in it further. We never treat ourselves as knowing everything because the insurer's environment, want to make sure that, whatever's coming on your Apple Mac there, is it suiting what you want to do at work? And does it look the right way? Is it quick enough? So yeah, we work, and right at the beginning, we are immersed, completely immersed. Ordinarily on site, doesn't matter where it is in the world, we're on site.
And with your existing, let's say your existing models within insurance companies, obviously the pandemic, which we spoke about, this has impacted on that. Has it impacted on these models in terms of the kinds of claims that are going through, the kinds of claimants, the kinds of fraud? Did you have to react to that and change models around in the past year?
Yeah, we actually were actually the first out of the blocks back in March. We held quite a large webinar talking around the impact of COVID on the insurance market. I think we were the first. It's fair to say that there will have been some changes, but if I'm really honest, a lot of the fraud there has not changed. You're just maybe getting a bit more of it and a bit more where the claimants are a little bit more pushy. I think one thing we've noticed, and this is kind of putting aside COVID for a moment because it seems to, it's consumed us. We ran one particular proof of concept, and I won't name the insurer, but we found fraud they didn't know existed. It was a type of fraud they hadn't seen before. It wasn't relating to COVID, but it was quite a surprise to them that we found something. And they got really excited by it because they couldn't get the data together in the same way we did. And then we found it. They were elated because that was a new type of fraud sitting in there. And sometimes some of the fraud you find, the route to deal with it is to get the analytics working, but also is a way to what can you change? Is it something in the policy wording? Is it something in the claim wording? Is it something in the contracts with suppliers? So, you find when you're running proof of concepts that, we learn, the customer learns, and, you bring knowledge together. And the knowledge that's what important is we've got knowledge on it. And certainly I've been around a long time and so have others, but it's sitting inside an insurer is tons of knowledge, tons of SME knowledge, where if you bring it together as a collective entity, like one team, you get results. If you just have the supplier saying, here's the analytics, off you go, it's the wrong way of doing it. And I think that's destined to fail, to be honest. So yeah, it is a team effort, and I mean a team effort as well.
Good. And in relation to the types of claims, Glenn, I know over here it's kind of widely reported that there's been a drop in road traffic claims, obviously, less people driving, things like that. Are you seeing, or do you have any predictions for the kinds of claims that are coming down the road now, be it, less workplace claims, obviously because people are at home, but is that going to be an increase in other claims, in stress-related claims or illness-related claims as a result of people working from home? Is it too early to tell that yet, which way it's going to go?
Claims obviously have life cycles, and injury claims are the longest. We have a 3-year limitation in the UK for making a claim. Will you get more of those types of claims? Probably. I'm seeing anecdotal evidence that vehicle thefts over here have gone up quite significantly, which is unusual because vehicle thefts over here have historically been going down quite significantly with vehicle security. It's, from what I'm hearing, and this is from investigation businesses, actually going up quite a bit. I think, prime pressure points over here, if you put aside vehicle traffic and, the vehicle activity's gone through the floor. If you look at what hasn't, is people are in their homes, people aren't in their businesses. But to be honest, if you look at how insurers tackle fraud, it's household insurance where I would argue they're not as effective as other areas. There's been a lot of focus on motor vehicle fraud. And if you're sitting in your house all day, every day working, or you lose your job and you're shut in your house, what's the first thing you see around you is your house. And then you might get a renewal coming through from your insurer, which is usually a reasonable sum of money, might have gone up. And is that the trigger point? So I look at household claims as something of particular interest. You will get a cycle with motor vehicle claims coming back. And I go back to the other thing about suppliers, the industry. Less vehicles on the road means less accidents, means less repairs. How are those suppliers, how's the cash flow going? And what's happening with when they're repairing cars now? So I think, sometimes you look at the policyholder and sometimes it's the supplier. You may look and go, who is in real dire straits here?
Yeah,
now,
pay attention to it.
Yeah, I have a family member in the motor trade and he says, a lot of it's on its knees. So will that drive behaviors? Well, for some, I think it will, but, it comes in a cycle. There's not a lot of travel insurance being sold at the moment. That was always high fraud risk business. That's going to come back. I think people are going to be traveling a lot. And I think there'll be an uptick in that type of claim. So, and the injury claims, whether it's, employers' liability claims have probably gone down a little. Public liability claims probably have as well. It'll come back.
It'll always come back. Nothing sure, then it'll come back.
There is a lull. There is a lull, but I keep repeating it. But look at the supply chain.
Yeah.
Look at businesses.
I was reading a KPMG report there, and again, this kind of feeds back into, I suppose, the start of COVID. This was dated April 2020, so it was around the start of it. But they were saying that because people were working at home, a lot of their handlers were working at home. There was an issue where they were facilitating claims processes by waiving certain requirements, and they were simplifying the paperwork. So that information is obviously going to be, in your case, fed into this insurance company. You're then going to come along and take this data. So, is there going to be a knock-on effect from this incorrect data at this panicky stage of COVID in the first few months where everyone was at home and they didn't know what, trying to get computer systems, and as we were speaking earlier on, Wi-Fi and all these issues. So they're not taking in the full information that wouldn't be the norm. And that information is then fed into the system. That's bound to have a knock-on effect.
Yeah, it will, because, I said earlier on, good data is needed. And something else you've touched on, we have there was a huge disruption. I'm sure it was the same over there when the lockdown first started, And the one thing we certainly flagged fairly early on was, don't just look at policyholders, third parties and suppliers, look for the enemy within. And this is, we certainly, when we work with insurers, we have one big insurer. In fact, we're still working with them. The first conversation we had was about internal fraud and the claims function. That's where they wanted their first analytics to start.
Okay.
That's the first point. 2 days later, it was in the press here, they had a big conviction.
Yeah.
But their worry was what's going on inside our business.
Yeah, well, like most businesses, there's always those kinds of issues, but when you're in a big working environment, it's harder. When you're at home with access to the same information, it can be tempting. And, particularly if you are worried about your future and they're under the same financial pressure as everybody else, worried about COVID and worried about whatever it is, Brexit and any other issues that come down the way. So they're under the same pressure. So there is temptation there. There's no doubt about it.
And there's data. So, I've got 2 screens I work from.
Yeah.
Every insurer should have robust control of its data. But if you're sitting at home and you're running 2 screens, and there's, I'm not trying to educate here, but there's data on one screen that you may want to think about putting to another screen.
Yeah.
So we know data theft is an issue for the industry. Data theft that then gets used to turn into personal injury claims. So, there are big risks. Who else is in the property with you when you're on calls? Who else can see your screen? So,
Yeah, it was just, I think those hazy days, the initial days where, it was months and months of a bit of confusion. And I think a lot of things, reasonably happened within that time that, now they've been corrected. We've had time, So moving forward, there's a lot of challenges coming in mitigating fraud. And I just want to talk to you, is there any opportunities there?
Yeah, I think that the challenges that are coming, there's a lot of holes in the insurance fraud process with insurers. And I kind of pretty candid. There's a lot of fraud models out there that are stuck in time a little. They're the historical models, very manually focused, a lot of reliance on people. And, if you look around, in some of the insurers are moving past it. We're engaging with a particular insurer in APAC at the moment. They've gone through that stage of trying to do it with lots of people, struggled, whatever. They're not really interested in improving that. They're running straight past it to say, we're going to automate it using analytics. We just do not want to try and improve this people-heavy model. So we see that a lot, and a lot of sort of, think focused on one type of environment. So there's a big opportunity there, which obviously analytics helps with. But there's something else happening that all around the world, something is really starting to gather pace, and that's digital claims handling.
Yes.
So, we are engaged with, I don't know how many insurers now, where digital strategies are at board level now. How do they automate claims that are genuine? They call them over here straight through claims processing. You make a claim now, and a few minutes later, it's just paid, no human involved. There's a huge focus on that because it makes it more efficient for the client. We're in an on-demand world. I'm not going to promote a brand here, but this house is an Apple house, really.
Yes.
If I want something on the internet on my phone, I go on an app, I press the button, I buy something. You can even buy a car online now. Yeah. There's not much you can't do online. You can't get your claim paid typically online in a few seconds. There is no reason why for genuine claims, using analytical modeling, AI and machine learning, you can't, and the 80-20 rule applies. If 80% of the claims are fine, non-contentious and simple, why did you not automate it? Now that's coming everywhere. So every single insurer we engage with has got these eyes on AI and machine learning and automation. And it's trying to make sure that the people that are doing all the admin work in claims now, that are actually managing more of a process than the claim, are used to do the more complex and technical stuff and be really heavily focused on the customer. That brings challenges. If you automate a lot, where's the fraud sitting in there? And your tech's got to be clever. It's got to work in real time in a couple of seconds. But also, fraud teams typically work 9 to 5, Monday to Friday. If your clever technology spots a fraud at 8 o'clock at night, you need someone to say it's been pushed off the conveyor belt. you need someone to talk to a customer now or interact with them through a portal.
Yeah.
If you find the fraud on a Friday evening, the fraud team's going to come in on a Monday, work through their backlog, and already the customer has been shouting because they're told they've got straight-through processing. When, straight-through processing, fraud will have to come off there, so will sort of complex liability and indemnity issues. But, that's coming. There's this huge opportunity because the upside to this is analytics plays really into this. And, you can dramatically reduce what you need to come out at the back end. From an investigative point of view, certainly in your sector, you could find the point where insurers become really self-sufficient, and some of the insurers here are already running the majority of their interviews from their offices online with recording facilities. They're not using outside investigators quite as much. So if they're armed quite quickly when the claim is made digitally, leaving footprints where they are, their IP address, when it comes to the investigator sitting desktop, they've got more information at their fingertips about the behaviors of the customer than they have in a manual process. But of course, you've got to have the human involved to do the valued work, and you have to have a human involved in investigating it. So whilst there are challenges coming down, and it's not going to stop because COVID's accelerated it, the opportunities there are huge. We're all logged onto a computer here. We've all left a footprint on our computer somewhere. Somewhere, they're logging our footprint. When you make a digital claim, you're leaving your big footprint on there and tell a lot about you. So I think it's quite exciting times. And if you want to give an example of, how much focus is on it, Lloyd's of London is the oldest insurance market in the world, 335 years old. I think the premium level is about £35 billion a year. When the pandemic was on, for the first time, I think, in its history, including in the war, its trading room was suspended where everyone went into Lloyd's of London, and they moved into a digital space. They announced a digital blueprint for the future. I think it was Q4 last year. It's a digital model. That's the oldest insurance market in the world pursuing a digital footprint. What is that telling everybody?
Yeah.
That you cannot escape this.
Yeah.
And
don't
if you
be
look,
left behind.
there are digital insurers cropping up. They just want digital. So we've got some. I'm conscious. I think we've got 5 or 6 minutes left. We've got some questions.
Will I read them out there, Glenn? I just see one here, Rosalind.
I think the first one was from Rosalind Lee, 324. Yeah.
Okay. So Rosalind says, would it be fair to say that Irish insurance companies are starting to challenge claims more in recent years, and that the costs incurred by the claimants where they lose should be a deterrent?
Yeah, I see both sides. That I see more challenge, and I see some that seem a little bit reticent to challenge some of this. I think sometimes they're seeing what's going to happen at the end of it. So there's a little bit of nervousness sitting around there. I think it's become quite an obvious issue. I know I've watched some cross-examining of insurance execs last year. I think it was the year before, where people were saying, what are you doing about this? There's some criticism of the market. So I think I'm seeing some tough people doing some tough things, but also seeing some where you work with them and say, you could turn the heat up a little, but it comes down to what's the tolerance of risk. And, when an insurer tells you they've got a zero tolerance to fraud, to insurance fraud, that's a brave statement, because that means that they're going to fight everything. I've yet to see an insurer fight everything. It's about having a proportionate response to that. So, most people are genuine. So why drag them through a process which is unfair?
Yeah, absolutely. And I think as well, when it comes to any form of a court case, it is just expensive to run a court case. When you're paying for doctors, you're paying for barristers, you're paying the solicitors, you're paying everybody out. By the time every expert on these cases gets paid, oftentimes, that's one thing that people say to me all the time is, what, particularly because we do find a lot of fraudulent cases, and we go to court with them, and they say, how could they pay out that money anyway? It was a fraudulent case, and you're trying to say, look, they paid out that amount of money so that they wouldn't have to pay out extraordinary money on fees, and there's no real interest here in saying, oh, well, I'm going to punish them, but I'm going to pay extra just to punish them. It's a business after all. They're insurance companies. They're in business to make money. So it's not really, I suppose, from their point of view, it's not really their job to go after these people, which is why, there's kind of claims now saying, look, we need to have this dedicated force, this, be it from the Gardaí or whatever it is, who will prosecute the fraudulent cases. But again, it comes down to time and resources, and are they available and are they not? And sometimes it is just cheaper to pay out on a smaller claim, even if you suspect that there's something wrong.
And we've got a few. There's a Kevin here.
Kevin here, yeah.
Kevin, I hope you're well there. Kevin's question is: managed fraud analytics versus in-house. Is there a cost-benefit model to think about insurance from? This is quite a topical subject, because on one hand, we've met a number of insurers say they're going to build it in-house, their whole fraud analytics model. Some succeed, many don't. They often find it's incredibly expensive, and automating it as part of the overall claims process, many insurers find incredibly difficult. When you look at, should it be a partner like Luxoft, whatever it is, I think the costing model is I said it earlier, is rather less than people realize. But one thing we do as part of a proof of concept, or a proof of value, we call it, is about demonstrating the value in it. Because if there's no value in it, why bother? So it's about saying, well, it will detect more fraud and it'll make you more efficient. So I think people vary. I think, I'm sitting in a tech firm, but when I was sat and an exec for an insurance business, we had this saying, let's just stick to our knitting. We're good at designing policies. We're good at selling it. When it comes to the analytics, let's use somebody else because they're better at it. And that was a modern insurer. So Bridget's actually raised a question there about, says, Glenn, you mentioned the need for more automation. Something that I would be concerned about is inherent bias with coding, given the data gaps around people who aren't white men. Is this something that's part of the conversation between insurance experts? Well, firstly, analytics and automation, they don't work on gender, race, or anything else, or color. They work on what's the behavior in the data. So one of the things we do is like a peer group comparison. If you take 1,000 people making a claim and you compare the behaviors of people in there, just the behaviors of what they do, the way they make a claim, the way they challenge, the times, dates, a whole range of it. It then says what's an anomaly in there, and then it produces it. There's nothing in there around, race, origins, gender, absolutely nothing in there. It is purely about what does the data say in there. And, and there's another question, that question's got a question around bias, and Chloe's raised a question for bias there. So this is an interesting one. If you go onto the IBM website, and we work with them, on there, in their annual report, I think from 2019, they talk about artificial intelligence and bias. That technology we work with, they are so strong and vocal around bias as an analytics provider. I think they're stronger than anybody. We have what we call open box technology. You can see what's going on. You can control it. There's no black box analytics. We don't take your data and then we hide what we do. You see everything and you control it. You make a decision what you do on it. When we work with insurers, one of the things we actually are doing, and this is consciously, is we work with the insurer to say, what are you going to do with our technology? What are you actually, and if we have concerns about an insurer and think they could be doing some profiling that is just not ethical, we're not going to do business with them. It's as simple as that. We have transparent technology. People can see in. If there's a complaint about it, you can see what's in there. But more importantly, the technology is looking for, as I said, anomalies in there in the data. And then a human makes a decision to say, is that anomaly of value? And it's all around, that the tech doesn't say, focus on those things. It's purely about, here's all the data. What is the data telling me? So I think the bias thing's a really good point. And interesting on bias, if I think about the insurance fraud models I've worked in around the world, where the bias is sitting is actually when the human response to claims, where you feel the human saying they're referring a claim to a fraud team, and I've had loads of claims referred to me over the years, and you refer it. And then when you look at why they referred it, you think, hang on a second, that's a bias you're applying on that particular claim. you might have a particular claims handler that only refers a certain type of claim to you. And you think, what is happening with the other claims you're handling? So there's bias sitting there. So in a way, you could say the analytics actually is quite helpful. And the automation, you're not automating the decision whether to pay or not. You're automating the referral to the handler, say, what do you want to do with it? Yeah. That's down to you. All we're saying is there are some anomalies in here. What it doesn't say is there is categoric fraud. It might say that we work on a predictive model. We might predict the likelihood of fraud, and it's up to you what to do with it. So I would say the analytics need to be controlled and governed, but I think they're actually in a better position to tackle bias. And, you know, I've been around a long time, and you can see the bias in the insurers there. A couple of linked questions, actually, about the IFB and the City of London Police. Do they still use a particular product? Now, the IFB does use an analytical product. The City of London Police don't use it. They receive the output of the technology. I don't know what technology they're currently using, because there's probably 5 or 6 forms of technology sitting out there. But our tech can do what they do. So I'm not sure what they're currently using. But I think they've had, it's been an interesting journey for that. It's a tough start for the IFB, and it's still fairly tough to do that there. So I think, good questions coming up. I don't know whether there are any more
questions. More there.
Probably pick off a minute or two if there are any more questions. But I think maybe if I was going to have a parting shot after 30 years in this sector is maybe some key messages about, if your fraud model has been pretty much unaltered for the last 10 years, you probably need to draw a line in the sand and get a whiteboard out and say, we may need to change this, because the world's moved on. People know how to defraud insurers. It's pretty common knowledge. It's about how do you optimize your people? How do you optimize your suppliers? How can you get and use analytics in a way that give you value? How do you evaluate the analytics? And how do you get a strategy together that is going to survive the next 5 years? And, start being cognizant of the whole digital journey. So, I'm not doing a big advertising sale here, but that's the sort of thing we work with insurers on. We at the moment, we do virtual whiteboards to say, where are your problems and pinch points? Obviously, we're trying to help with tech, but, we don't charge for giving feedback or providing advice or guidance. We do that. And if our tech works, we'll say, look, why don't you evaluate it? But I do think it's important to say, if the model's not changed, and don't follow everybody else, just because an insurer A is doing it, that model may be wrong for you. So, we come up against insurers all around the world where we look at the fraud models, and I've yet to hear us say it. We kind of say, you probably need to think about doing this differently because you could be more operationally efficient. So that was probably my parting lines. But Bridget, I think you're timekeeping.
Thank you so much, Glen and Elaine. Some great insights there, and by the sounds of it, exciting things down the line. Really interesting discussion around the AI and machine learning. Really interesting. Thank you. Thank you very much for attending today, everyone. We hope you found it informative. Just to let you know, today's session has been recorded and will be available on acfe.ie on the 10th of April. And you can have a look there if you'd like to register for any of our other events. Or you can contact me directly. My name is Bridget Tyack, and you can find my contact details on the email that you'll receive after this webinar. If that's all we have to say, thank you again, Elaine and Glen. Until next time.
Yeah, no, thank you very much. And I say, I think my contact details are probably going to be made available by Bridget. Please feel free to drop me a line. I'm happy to answer any questions. Get on LinkedIn and link up, whatever it is. And if anybody wants a bit of a deeper dive into the subject or a bit of a second view of what you're doing, then please do let me know. You'll find me straightforward and frank talking about fraud. So, and my Easter egg will hopefully last me till Easter now.
It won't.
So thank you to ACFE. Thank you for Elaine for being question master, and I hope everybody enjoyed that. And great stuff. Thank you very much.
Thank you, everybody.
Thanks, everyone.
Thank you.
Bye bye.
Bye bye. Bye.
Bye bye. Bye bye.